Welcome back, Alpha Hunters. So how many stocks are you holding for your long-term portfolio? If you have no idea how many is a good number, or you are unsure about diversification, this video will be for you. In this video, I'm going to clear up some misconceptions, things I see from other YouTubers, and how we should invest for the long term. See you on the green side. In the background, I'm going to let a trade run out and we'll see how it works out. That way you can kind of get an idea of the way the market moves, where to put your stop, and just start to get a general understanding of the way the trade setup and management looks. Let's talk about long-term portfolio diversification or stock picking. Now, I'm not talking about trading here, but a long-term portfolio. Assets we fully intend to hold longer than a year. I'll tell you why you shouldn't do it. Then, I'll share with you what some legendary investors do. The reason why I wanted to talk about this topic is because I have watched a video of another YouTuber and couldn't believe how many stocks this person owned. They even made the comment of, they like all these companies and want to be an owner of these companies. They had 20 stocks or more on their list. And I couldn't see the whole list as they didn't scroll down. There are a lot of companies I like, but I don't have enough time to track them all or capital to invest in all of them to make it worthwhile. Also, I know I'm most likely not going to outperform a bunch of monkeys. If you think you can pick a better stock portfolio than blind monkeys throwing darts, then I have a story for you. There is a link to an article down below. It's called Dart Throwing Monkeys. The article will go into more details if you want to check it out, but I'm going to cover the highlights here. In 1973, Princeton University professor Burton Maciel claimed that a blindfolded monkey throwing darts at a newspaper's financials pages could select a portfolio that would do just as well as one carefully selected by experts. Well, somebody decided to test his theory, and this is what they found. This is from the second paragraph from the article linked below. Maciel was wrong, stated Rob Arnett, CEO of Research Affiliates, while speaking at some conference earlier this month. The monkeys have done a much better job than both the experts and the stock market. Triple-decker bird! So if we most likely won't beat the dart-throwing monkeys, what should we do? Well, this is what some of the most legendary investors in the world say to do. There will be a link down below to another article. And this article is about what several legendary investors say about diversification or concentrated holdings. And by legendary investors, I'm talking about Warren Buffett, Bernard Baruch, and George Soros, just to name a few. So what does Warren Buffett say? Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. George Soros also had this to say: if stocks go up, you buy more. You don't care how big the position gets as part of your portfolio. If you get it right, then build. If you're liking this content and it's clearing up your understanding of long-term investing, give it a like and let me know in the comments if there's another investor quote you like. I always like hearing new ones. Now, Buffett has another insight that isn't covered in that article, but it is directed to those that don't know how to find these kinds of stocks or don't have the time. Invest in general market low-cost funds, and ETFs are a good idea.
My boy's wicked smart.
Let me share with you two things on what you want to look for to invest in a stock for the long term. The first is about the company of the stock. Make sure you understand the company, how it makes money, and how it's going to continue to increase in value in the future. These can be companies that you work for or you are a customer of. But if you don't fall into those categories, then really do your research. The second thing is about the stock itself. You might be thinking, aren't they the same thing? And no, they are not. But I'm not going to go into that here. What you want to know about the stock is the abundance of stock options it offers. Take a look at the options chain and see how many different expiration dates they have available. Also notice how close the near-term one is and how far out is the farthest. You also want to look at the price intervals of the strike prices. Having quality options in a stock will allow you to buy insurance for potential downside risk, generate cash flow, and the better the options, the better the flexibility to execute these strategies. Lastly, let me share with you what I do. I invest in the SPY.
Say what?
Sure, I have time to do research to find other stock opportunities, and I know how to. And sure, I could get a better rate of return over the past several years by investing in the QQQs. But I combo my long-term investments with what I know about options to generate predictable above average returns. Now, if I come across a stock that I think could take off over the next few years, then I will put an investment behind it. This way I still have my predictable SPY plan and a stock with great upside potential. So that might be a good idea for some of you out there. If you aren't sure how much capital to allocate between trading and long-term investing, check out the top left video on capital allocation. Alrighty, take care, Alpha Hunters.